Welcome back to the deep dive. In a world just overflowing with information, it feels like a constant flood, doesn't it?
It really does. Hard to keep up.
Exactly. So, our goal here is simple help you cut through all that noise. We take the source material you give us,
Research articles, notes, whatever you've got.
and we dig deep. We pull out the really important nuggets of knowledge and insight for you.
Think of it like your personal shortcut. A way to get genuinely well-informed, fast, with the context you need.
That's the idea. You hand us the stack, we do the digging. And for this deep dive, wow, you've given us a really fascinating set of sources, mostly focused on the market.
hmm
Specifically, we're looking at the sentiment. What's the feeling around some of the companies making headlines right now, based only on these materials?
Yeah, it's like we're doing a very specific Market AM sentiment check.
Mm.
But crucially, it's drawn solely from what you shared. We're trying to understand the market's pulse, just as it's captured in these pages.
That's the mission. So, okay, enough waiting. Let's start the deep dive into these sources.
Okay, let's get into it. So before we jump into specific companies, the sources you provided, they really paint a pretty stark picture of the whole economic backdrop.
Right, the context for everything else. And yeah, right up front, that World Bank forecast. The sources describe it in pretty grim terms. They highlight this prediction. Just 2.3% global GDP growth for 2025.
Which, yeah, the material makes clear, is a noticeable downgrade. They had it at 2.7% back in January.
That's quite a drop.
It is. And maybe even more striking, these sources say it's looking like the slowest growth rate the world's seen outside of a recession since way back in 2008. That really sets a challenging stage, doesn't it?
It certainly does. And according to what you've read in there, what's the main reason? What's dragging things down?
Well, the sources keep coming back to President Trump's tariffs. There's this phrase, macroeconomic fog. And one piece is really direct, saying trade wars are like slicing 20% off global growth.
Wow, 20%. That's
Wow.
a massive number. And interestingly, the material flags the US maybe being hit hardest among major economies.
Yeah, it mirrors warnings from places like the OECD, which one source mentions. And while emerging markets are reportedly seeing foreign investment dry up, one piece describes the U.S. itself as bleeding momentum.
Hmm. And tariffs aren't the only thing, right?
No,
Hmm.
no. The material also lists rising inflation, climate shocks are mentioned, and governments just struggling with heavy debt loads, all contributing to economies that already feel, well, kind of fragile, maybe even teetering, as one source put it.
Okay, so that's the general climate. The sources also mention the US-China trade talks, the ones in London.
They do. They talk about just how complex it all is and, the impact on really critical supply chains, things like rare earths.
Vital for EVs, defense systems.
Exactly. And semiconductors, of course. Big implications there.
And what about the market's reaction to those talks finishing up?
Well, that's interesting. One source says the market basically shrugged, just
Okay.
sort of ignored it, even though officials apparently reached some kind of framework.
So the expectation, reading between the lines in these sources, is that tariffs are going to continue weighing things down, possibly pushing prices up.
That seems to be the takeaway, yeah. Which, like you said, could really complicate things for the Federal Reserve. Their dual mandate trying to balance stable prices and full employment.
The tightrope walk.
Exactly. And the sources, quote, Fed Chair Jerome Powell admitting it could be a very difficult balancing judgment. There's some suggestion the Fed might let the economy run a bit hot, but these tariffs, they make the whole picture much, much hazier, according to this material.
Okay, so a complex, challenging backdrop. And the sources mentioned we're already seeing some signs of a slowdown, like softer data.
Yeah, one economist is quoted pointing to declining air travel numbers compared to last year. Just one example, but it points in that direction.
Got it. So, against that backdrop, how did the market react to specific company news? This is where we get into that market AM sentiment from these reports.
Right, let's dig into the companies.
Okay, let's start with Meta platforms. What did the sources highlight there?
The really big thing jumping out from the material on Meta is Mark Zuckerberg's major push into AI, specifically superintelligence.
True intelligence.
Yeah, and the sources detail some pretty aggressive recruitment, pulling top people from places like Scale AI, Rivals.
And there was talk of a huge investment, too, wasn't there?
That's right. Advanced Talks reported around $14 billion potentially going into Scale AI, maybe even hiring their CEO. It's presented as a massive strategic move.
So the sentiment, based on how the sources describe this, sounds pretty positive.
Strongly positive, yeah. It's framed as Meta being really decisive, investing heavily in a key future growth area. The reporting suggests the market sees this AI leadership push very, very favorably.
Okay, interesting. Let's switch to Google or Alphabet, and specifically Waymo, too. What did the materials say about them?
Here, the picture from the sources feels, well, a bit more mixed, maybe even leaning a bit negative on some aspects.
Like what, for example?
Well, there's one report about Google's AI tools, how they synthesize answers now.
Right, the AI overviews.
Yeah. And the source says this is gutting publisher traffic.
Hmm.
Basically, people get the answer right there. They don't need to click through to the original sites as much.
That sounds like a potentially big challenge for publishers and maybe for Google's ecosystem long term.
It does. And then, separate from that, there was a more direct negative event mentioned involving Waymo, their driverless cars,
Yeah.
being set on fire during some anti-internal combustion engine protests in LA.
Oh, wow. Yeah, I remember reading about that. And the sources note Alphabet, the parent company, is now hiring someone specifically for community affairs there.
Exactly. A local specialist to handle the fallout, essentially. So you see, the material presents these as, challenges. One's a business model issue. The other's a public safety PR problem requiring a direct response.
And while the sources don't maybe spell out the immediate stock impact of those specific things.
Right, not in these snippets. But the overall sentiment reported around these events definitely feels like concern or difficulty for Alphabet.
Okay, now shifting gears again. IBM. The sources seem to report some news here that generated a very different kind of sentiment.
Oh, yeah. This was a big one in the material provided. IBM revealed plans for what they're calling the world's first large-scale, fault-tolerant quantum supercomputer.
Quantum Starling, right, targeted for 2029.
That's the one. And the sources really highlight this quote from Jay Gambetta, IBM's VP for quantum. He apparently believes they've cracked the code on error correction.
Which, as the material points out, has been this massive, massive roadblock for practical quantum computing.
Huge hurdle. And these systems are apparently already being built. So the sentiment captured in the sources around this news, overwhelmingly positive.
And did the sources link it to market reaction?
Directly. Yeah, one source explicitly states this announcement pushed the tech giant's shares above a $250 billion market value for the first time, and to a new closing high of $276.24.
Wow. Okay, so that's a clear case. A specific tech breakthrough reported positively directly leads to a strong positive market reaction. Investors are clearly optimistic about IBM's quantum future based on this report.
Absolutely. A textbook example right there in the sources of a strategic announcement driving immediate positive sentiment and stock movement.
Okay, let's turn to Tesla. Always a lot of noise around them. The sources seem to present a few different angles here, maybe leading to a more mixed sentiment.
Yeah, that feels right. It's definitely mixed based on this material. On one side, you have reports of Elon Musk saying his recent attacks on President Trump went too far.
That's a noticeable change in tone.
It is. And then there's news about the robotaxi service launch.
Yeah.
Tentative June 22nd, a driverless car spotted in Austin, and Musk predicting, that other car makers will eventually license Tesla's tech.
And the material actually showed an immediate market reaction to that specific news combo.
It did. One source noted Tesla shares jumped 2.5% in pre-market trading right after those Musk comments and the robotaxi date came out.
Okay, so short-term positive bump from those specific news items, according to the sources.
Right. But then the sources also include less rosy information, like a Wells Fargo analyst predicting another weak quarter for car sales.
What were the numbers mentioned?
North American deliveries reportedly down 13% year-over-year through May, and Wall Street overall projecting Q2 deliveries down 7% year-over-year. Plus, the analyst sees profit margin pressure coming.
And the competition aspect, did that come up?
It did, yeah. The material brings up competition from, like, Alphabet's Waymo and also others like Uber and Wave entering the autonomous space.
So, yeah, definitely sounds mixed. The sentiment, as reported, reacts to headlines like Musk's comments or a launch date.
But underneath, the sources point to analysts' worries and sales data suggesting ongoing challenges, things that, according to this material, could definitely weigh on the stock longer term.
Okay, let's quickly touch on GameStop. The original meme stock, it popped up in the sources too. What was the story there?
Well, the source notes the GameStop actually swung to a quarterly profit, which, sounds good on the surface.
It does. Profit is usually good, but...
But the source immediately adds the qualifier, despite falling sales, and the market reaction reported in the source.
What was it?
Negative. Shares fell 4% before the market even opened.
Huh. That's really interesting, almost counterintuitive. They make money, but the stock drops. So the market sentiment, as reported here, was focused entirely on the falling sales number.
It seems so. That negative detail overshadowed the profit. It really shows how, in this specific instance, according to the source, the market's pulse was tuned into that revenue trend, not the bottom line figure for the quarter.
Fascinating. Okay, let's shift slightly. Crypto space. Circle, the stablecoin company, gets mentioned. This sounds like a story with a lot of excitement based on the material.
Oh, absolutely. As reported in these sources, yes. Circle went public just recently, and it's soared nearly 170% on its first day.
170%. Wow.
Yeah. The sources note it was super actively traded, fourth most on Interactive Brokers, I think. It became a pretty big holding in ETFs like the ARK Innovation ETF.
And the material suggests this might kick off more crypto IPOs because of investor appetite and maybe a friendlier political tone.
That's the suggestion, yeah.
Yeah.
Citing strong investor demand, partly linked to what's described as the Trump administration's more crypto-friendly stance.
But there was a note of caution, too, about valuation.
There was. The sources do mention the high market cap, around $25 billion, which works out to something like 160 times earnings. And one source quotes someone admitting those multiples are, quote, insane and unlikely to hold up.
Okay, so based purely on the sources, massive positive sentiment, huge demand driving the price up right after the IPO.
Definitely.
But the material itself flags that high valuation as a potential concern down the road.
Yeah, it presents both the initial excitement and that little reality check.
Got it. How about NVIDIA? Huge player in tech lately. What did these sources have to say?
Well, the material actually references a past problem for NVIDIA.
Yeah.
It notes they took a huge hit to sales previously because of those restrictions on shipments to China.
Right, I remember that being a big deal, a significant headwind.
It was. But despite that past issue, the sources make a point of saying NVIDIA is now trading near an all-time high, and the CEO was apparently giving a speech today.
So the sentiment captured there, just based on that near an all-time high status, is clearly positive right now.
Seems that way, yes. It suggests the market, as reflected in these sources, has kind of moved past those earlier problems and is valuing the stock very highly at this moment, likely based on current results and future hopes, judging by that trading level.
So a snapshot of strong market confidence according to the material provided.
Exactly.
Okay, let's wrap up the company specifics with General Motors. What was the notable news about them in these sources?
The key thing highlighted was GM's plan to spend big, $4 billion, specifically on its U.S. manufacturing plants. Orion, Fairfax, Spring Hill were named.
And this involves actually moving production of some key SUVs, the Chevy Blazer and Equinox, out of Mexico and Canada and into the U.S.
That's right. And the sources frame this very specifically. It's presented as a clear win for American manufacturing, especially, in the context of President Trump's auto tariff policies.
So aligning with the political climate.
Seems to be how it's presented. The GM CEO is quoted focusing on building in the U.S., supporting American jobs. The material also briefly touches on cost, suggesting it shouldn't hit affordability too hard if the parts stay low cost or tariff-free.
So the sentiment around this GM news, as conveyed in these sources, sounds definitely positive. A strategic investment aligning with the current policy environment.
Yeah, positioned as a positive move for domestic production in the current climate. It shows companies reacting and framing their strategies within that broader macro context we talked about right at the beginning.
Right. So, all right, let's take a step back. We've looked at the macro picture, then drilled into several companies. If we try to synthesize this market AM sentiment based only on these sources you were given, what's the overall picture?
Well, based purely on this material, yeah, we've seen a really wide range of market sentiment just in reaction to recent news.
Absolutely. You've got, on one end, really strong positive reactions, like for IBM's quantum news or Meta's big AI play, and that huge excitement around Circle's IPO.
Right. And NVIDIA trading near highs also points to strong current confidence there.
Then you have the more mixed bag, like Tesla, where sentiment seems to jump on specific headlines, but the sources also show underlying concerns about sales and competition.
And at the other end, we saw clear negative sentiment reported too, like the market punishing GameStop even though they turned a profit because sales fell, or the challenges highlighted for Google and Waymo.
So it's clear from these sources how specific company actions, a tech breakthrough, a big investment, moving production, and also external events or data points, they directly shape how the market reacts, or at least how that reaction gets reported.
Definitely. And all of this, remember, is happening against that tricky global economic backdrop we started with, the forecasted slowdown, the uncertainty from tariffs.
Right, the fog.
Yeah, the fog. and the complications for central banks. So seeing these varied, sometimes really sharp market reactions to specific news within that landscape, it's particularly interesting right now, according to these reports.
And for you, the listener, this really is that shortcut we mentioned. By drilling down into these specific sources, you get a clearer view of what, according to this material, is driving market sentiment and maybe moving stocks right now. It helps cut through the noise to see what's actually being flagged as impactful.
Exactly. It's about understanding the pulse as captured right here.
So, to recap, we've seen market sentiment, as reported in these sources, reacting sharply to individual company news. Big surges from tech bets and IPO fever, dips from sales figures or, cars catching fire, all happening against that complex, challenging economic background described in the sources.
Which leaves you with maybe this final thought to chew on. We see these sharp reactions, right? But with the World Bank forecasting a global slowdown and tariffs creating, as the sources put it, economic fog, how much of this company-specific sentiment is a real indicator of long-term health?
Versus how much is just maybe short-term noise, reactions to headlines within a really difficult and uncertain bigger picture.
Exactly. Something to mull over, perhaps.
Indeed. Definitely food for thought. Well, thank you for joining us for this deep dive into the sources.
Always a pleasure. Thanks for listening.